Hello and welcome to this week's live weekly trade plan, where we go through the financial markets and we look to identify weekly and monthly levels of support resistance that we're going to be looking to use in the trading week ahead. But just before we begin this webinar, I would like to present a very exciting opportunity to you personally. So the Live Trade Room has been set up to offer traders comprehensive trading education, but most importantly, daily mentorship. So our traders can join us for 1 hour per day where we analyze the financial markets, we look to identify trading opportunities, and you can observe us trade our own live trading account. So the idea behind this is that you'll be able to get full access to our trade details but most importantly, our trading performance. So I'm delighted to say that we are currently accepting applications for places on our Trainee Traders Programme. Now please do click on the link below if this is of interest to you, and you can find out exactly what's involved and what we're offering. Now for a limited time only, if you are successful in your application, we are going to be waiving the fees associated with a place on our trainee programme. So there is zero cost associated with a place, and there is no potential for upselling or anything of that kind at any point. So this is a genuine opportunity, however it is subject to normal terms and conditions. So what we are looking for is genuine traders that are genuinely interested in learning how to trade the financial markets. So if this is of interest to you, please do click on the link below, do submit the relevant form, and one of our traders will be in touch with you over the coming days. So for now, relax, enjoy the rest of this webinar, and we look forward to seeing you soon. Bye for now. Hello everyone, good evening and welcome to our live weekly trade plan. Now it is Sunday, let me refresh exactly what date it is. It's the 26th of November already. So it's Sunday the 26th of November. Delighted you could all join us this evening. So for those of you that are perhaps new to joining us, let me explain a little bit about what this session is all about. It's basically a webinar where we look at multi-time frame analysis. Obviously, while the markets are closed, and that's just structurally important, it gives us time to take stock in terms of seeing what's happening to price action, and it enables us to plan for the week ahead. So we will be taking a technical look at weekly and monthly time frame charts, looking to identify the important highs and lows and genuine levels of support resistance that we can use for the trading week ahead. So as always, we'll observe our main 15 liquid global markets, plus any other markets you'd like us to look at as well towards the end. Okay, so let's get straight into tonight's webinar. If we can start, as we always do, with a risk warning, please make sure that you are aware of the risks involved in trading financial markets. So hopefully you could take a few seconds just to read through our risk warning. Fantastic. Okay, so why is it important to be aware of price action on multiple time frames? We've identified a few key reasons. The first one is that you can see more clearly what is happening and who is genuinely in control of the market. Sometimes, if you're looking at smaller time frames, it can be quite hard to work out, effectively what the market conditions are, what your directional bias could and should be. And planning off the back of that. So just take a step back, look at different time frames, and it just gives you a slightly different perspective, and it can really assist you as well with your trade plans. Secondly, the larger the time frame, the more important the genuine level of support resistance can become. And thirdly, it can also show you the important levels where a market is likely to move towards as well. So it does have an importance, and it's just a very useful time on a Sunday evening to spend a bit of time to go through different time frames. Okay, so with that in mind, then let's start, as we always do, with the dollar index. So we discussed last week that a confirmed break beneath the 93.28 would constitute a pretty significant reversal, let's say, even though if we take a step back, we can obviously see what has come before it, which is a major bear market, followed by a couple of structural failures to the upside, and now we've just seen a couple of structural failures back down to the downside. One area I just want to draw your attention to is the close of this market. let me just put in a blue line around the close of this market just to show you, and I'll convert this to a blue line just because it's a genuine level of support and resistance, and let's convert that to a nice blue. So you can see that up on screen now. It's the sort of roughly the 92,670 level, and I'm looking at it from more of a recent sort of price action perspective. Just looking at the time frames from July through to October, you can see how the market has been held up at this particular level on a couple of occasions. Now, I'm not saying that this level is going to hold up this market, but our bias is certainly to the downside now, having broken the 93,280 level. So this market is squeezing lower. We've clearly broken through the 93,12.3 level, which is another significant level of support resistance. And we could be heading down to the 92,866 level. So definitely a bearish twist over the last week in the US dollar. So let's see how this level, how it stacks up. It's very likely to continue pushing lower. So we're now looking at these recent lows here in August and September for price to squeeze down to there. It'd be very, very interesting to see what would happen at that point. Again, it's a major structural level with nothing but complete air beneath that level. So let me stick one last line in there around 91.07, something like that. And you can see that there's nothing but complete air beneath that level. So it's very, very bearish, the dollar index. So with that in mind, so we've broken the level beneath. So let's look at it on a weekly time frame now, and let's zoom in for you. So we were looking very closely at last week's low, which coincided with the low of 4 weeks previously, and we've had a pretty consistent smash right through that level. So what we're going to do is we're just going to monitor the highs and lows of this week's candlestick, which is, so the high is 94.0055. So let me put that level in. 94.055 level to the upside, and to the downside, we're going to work with this low now, which is the 92.580 level. So 92.580 level. So I'll put those two levels to the upside and to the downside. So, and this low is ironically a little bit cleaner than the previous low of last week. Plus, it was one pretty large range day that made most of this price action squeeze lower. And we were going into, unfortunately, the end of last week, we were going into the US bank holiday, the Thanksgiving. So we've had, this move through when the US markets are supposed to be at their lightest. So we've got this structural level, and it just coincides. The 92.580 coincides 92.560 level. So it coincides with previous lows. So we should get continuation to the downside. If that's the case, this could be a nice cleaner opportunity to take this trade a little bit lower than it was last week, which with a couple of elements of support in and around that kind of price action. So and just to look at things on a monthly time frame, you can see all of last month's gains were quickly reversed. But also look at the highs and the lows. Now we're coming to the end of November. So the high is 95.035 and the low, this is last month now, and the low is 92.560. And it's virtually the same, 580, and to the upside, it is 95.04 and 035. So very, very similar highs and lows, as you can literally see there visually as well. So there's no doubt about it. We could be into a little bit of a a bearish finish to the year, certainly if we get a break of these weekly and monthly lows. So definitely a couple of levels to look out for there with regards to the dollar index. So so with that in mind, it's no surprise to see the euro dollar break higher, but as you can see, only on Friday. So within this range, it was a very dangerous range to be trading this market. But on Friday, we've seen a very concerted effort to break above with complete sort of control over this market now. So definitely on an intraday basis, there's some opportunities to buy this above the high. The problem is, from a daily price action perspective, is the fact that we're running into the 120 level, which is just in here, and we also have the most recent high just above it as well. So if we apply our approach consistently, you could argue that we're looking for a one-to-one positive risk reward on this trade. Now, it's still potentially worth trading, but with everything that's going on with the euro, the Brexit negotiations, it makes it a difficult trade. But a break above the daily high could definitely constitute an interesting continuation to the upside. So we just want to go with momentum. We want to go in the direction the market wants to go with. We don't want to pick the highs and look to sell these highs. That's not what we really want to do. We want to be looking and identifying momentum. We can see recently that the momentum is very, very bullish, and as a result, we're looking to go with that momentum. But we do have a few areas of resistance at these levels. So let's see what unfolds with this market. So again, just to be consistent, certainly a break above last week's high was the preferable sort of entry to get into this market, but it all happened on Friday during sort of light US trading hours as well. So we're just going to work with these highs and lows. So I'm going to take the high of this market, which is the 1943. So let me put that level in. So 1943. I'll stick that in now, 1943. So there you go to the upside, and then to the downside, we're going to work with the 1712 level. So 1712. So so let's see what the next week has in store for the euro and the dollar. It's definitely going to be an interesting trading week by the looks of it. Okay, so with that in mind, then we can let me put this level in here as well, so you can. We do have our weekly level at the 33.36, and it would definitely coincide with a more prominent level in this market, which could be a level of support and resistance as well. So we're actually looking to break above that, but look where and I'll zoom in a bit more. So look at exactly where this market is closed. It closed at the weekly high, and this is a weekly high of a few weeks ago. So it was the high of the market on Thursday, and it was also the close of the market today. So again, with all of the sort of the political upheaval, what it does is it lends for slightly unstable kind of trading conditions, basically, in which to trade the pound. So of course, we're looking to trade price action, and if we get those opportunities, we look to take them. But there's scope to the upside as well. So it'd be interesting to see the open this evening and to see how price action initially reacts to the pound dollar. So let's take that across into the weekly time frame. So the integrity of this ascending line is still very much intact. We attempted to break lower, created a bit of a double bottom this market, and then some buying has come in, and we've broken above these sort of weekly highs as well. So we should be expecting continuation. So So we'll work with these new highs. So the 33.58 to the upside. So 33.58, I'll put that level in there. And then to the downside, which coincides with a break of the ascending line as well. So it's funny how all these sort of numbers and levels, start to stack up from a technical perspective. So the low is the 31.84. So I'm going to work with that level in there, 31.84, 31.84. So we'll stick that in there. And let me see. Okay, so that level's working for now. So let's see, a continuation to the upside is the likeliest outcome. So again, from an intraday perspective, there could be interesting sort of fairly short-term buying pressure coming in. This has been an interesting market, the dollar yen. On Wednesday, just before Thanksgiving, we got the break, that we were wondering if this structural break would actually manifest itself when price was beginning to be held up around that kind of level, but we've had a clean sort of break through this. So we've had a couple of structural failures to the downside and a bounce off the 114.50 level as well. So so that was the idea behind this trade. Was I suppose the only reason why we didn't take this trade is because it stacked up from a technical perspective, but it meant that it was more of a hedge trade with some of the other trades we were in at the time. So, but it definitely provided a couple of fantastic opportunities and intraday opportunities as well. But we got this sort of first what we call a structural failure. So we had a bit of a double top. And then this market decided to roll over. So there was an opportunity for market price to be held up at these levels, which it did initially and then broke through. So we've had a little pullback, as you can see, just on Friday, just back to the 111.64, which is our weekly low. So so if we take this information then over to the weekly time frame, and I'll clear this up for you. So we'll work with a little bit of consistency again now. So we were working with the previous highs on a weekly basis, and there's enough scope now with this weekly high and low to expect continuation to the downside. If we get a reversal and a break above the weekly high, could constitute an interesting opportunity to buy it. So let's work with the highs and lows of last week's candlestick. So the high is 112.70. So let's move this level down. 112.70, and the low of this market is the 111.05. So 111.05. Okay, so those levels are in there now. Moving on to the Aussie dollar. If you guys joined us in the day trading room, there was every expectation for the market to come back to these previous highs, which is interesting to see what's going to happen now this week. If we get a break of this level, we would anticipate the price breaking down to the 75.34. So let's see. You see the dollar has been weak largely across the board, apart from the Aussie dollar. And you can take probably 3 days last week out of that equation. But apart from that, the weakness has been in the Aussie dollar. So we're anticipating this market to at least squeeze back down to the 75.34. So most of the markets we trade have kind of been in a bit of a range-bound sort of bit of price action. So what we're going to do is we've been trading within these levels, so let's just be as accurate as we can. 76.37. We'll work with this new high. So if price rebounds up to this level and starts to break break to the upside, it could give some real interesting opportunities to the upside against the prevailing winds. Okay, so the low is the 75.34, and I'm just going to move this just 4 pips. 75.34, 750. Okay, so not much movement there over the last week. Taking this information into the dollar CAD, it has the potential to create a bit of a structural failure to the downside, which is why this weekly low is of importance. But as you can see, it's kind of rebuffed the price a little bit. Now, it looks like we could probably get price action attack these levels again. And if we got a structural break of this level, which is the 26.64, would give us a fantastic opportunity to take this market lower, especially with crude oil prices and moving higher, which are our trades that we're currently in. So we're going to look at this market very, very carefully, and let's see what happens to the US dollar for the next week. Okay, so we can work with these weekly levels, 126.64 to the downside and 129.15 to the upside. Yeah, let's work with these levels for the short term. Okay, so that's the highs and the lows. So it's the same picture effectively with the New Zealand dollar as it is, if I take this across, as it is in the Aussie dollar. So we're just getting that 3-day pullback, and then in the Aussie dollar we've had 3.5 day pullback basically, and now we're seeing if this market has what it takes to start squeezing lower. So on a weekly time frame, we have the high of the 69.79 and the low of the 67.78 in the New Zealand dollar. So there is some interesting opportunities below this level if some strength continues in the US dollar. So we could be attacking the low 60s. So it would constitute an interesting opportunity to take this market lower, despite the obvious weakness in the US dollar. Okay, so now just for a look at the euro pound. So we've decided quite some time ago that the market is very much range bound between the 90.31 and the 87.32. So we're talking about a 300 pip difference, and this market is clearly consolidating. It's just range bound within those levels. So we just need to stand back on the sidelines for a little bit. We're still going to work with these levels, 90.31 and the 87.32 to the downside, and a break of either of those levels would constitute a really interesting buy or sell trade in this market. It's no surprise with all the back and forth that's going on with the Brexit negotiations. So this may consolidate for quite some time. So just a little bit of patience with this market, and we'll see who has the upper hand at some point. Again, this is another range-bound market between the 134 and the 131. So again, it's kind of a 300 pip range between the highs and the lows, and the markets just keep bouncing from one to the other. So we're going to work with those levels. I mean, let's have a look at the weekly, and we work with last week's low just to the downside. So 131.15. So I'll just change this level, 131.15, just to be a little bit more accurate. So those are the levels we're working with in the euro yen. And every time you think and feel as if this market's going to break lower, lo and behold, the euro seems to come back. No surprise really to see the US indices sort of rally to the upside once more. Friday's price action was all-time highs yet again. So I suppose taking that onto the weekly time frame, let's just work with the highs and lows of this market. So we're looking at the high of 26.02. Unbelievable for these markets to be at these levels, but you know, that's where we find ourselves. And we'll just work with this low as well of 25.67. 25.67 is in here. 25.67. Okay, so those are the levels that we'll keep an eye on for the S&P. The Dow Jones is just sort of bouncing within this kind of range, generally moving sideways, but with an upside, a little hint to the upside with this market. So again, this week, or last week, should I say, we've had just a new high, and you can see that the only direction in which this market wants to go is to the upside. So let's see how long that continues for. So the high of this market is 23.598. 23.598. 598. Okay, so that's the high and the low of this sort of range bound price action. So we work with that for now. The FTSE, again, we're kind of in this range, high and low. You can see Thursday's price action bounced off the weekly level, which is the 74.54, almost exactly 74.53. And when you think like this is why we like to work with these kind of weekly levels, it's because price can react off these levels, and again they can provide interesting opportunities on an intraday basis in and around those levels to the upside and to the downside. Okay, so looking somewhat potentially bullish again. It would probably need the pound to sell off against the US dollar, but a foundation potentially for this market to start squeezing higher. And then finally, the Nasdaq, we're off to the upside with the Nasdaq as well. So very, very strong day. So I'm just having a quick look on the daily. So basically Tuesday and Friday of last week were incredibly bullish days with the Nasdaq. So it's no real surprise that this market just keeps grinding higher each week, week in, week out. So so let's take note of the high. So it's a 64.15. So 64.15 to the upside, and let's mark the low. 62.90. 62.90. It's going to be fascinating when these markets do come off. It's going to be an interesting time, I'd say. So let's see what happens with those global indices. Taking things over to the gold market, we have the high of 13.05 to the upside, and we have a low of 12.60. We actually also have a pending order still in this market to the downside. However, we're identifying this bit of sort of flag price action. So let's see what happens to this. Whether we get a breakout to the upside and we start pushing up to sort of 13.5, or obviously if we get a break to the downside, this market could really drop. And one eye as well on the US dollar for that gold market. So it's just a judgment call, and we're just range bound, so we're just slowly grinding higher. But let's see. We're going to continue to work with the 13.05 to the upside and the 12.60 to the downside. So that is the gold market. To just show it to you on a weekly time frame. There you go. So a significant sell-off last week, followed by a little bit of buying, and it closed. So a little bit of a rejection to the downside, actually, on a weekly time frame. So looking above the 12.50 first of all, the 1294 and then above the 1305 level as well would just constitute a very, very interesting sort of move higher in this market. Okay, so last couple of markets then. The crude oil, this is doing brilliantly well. So this is one of the trades that we're currently in. So we have an expectation of this market to squeeze up to the low 60s. So we actually have, let me see. So, sorry, let me zoom out a little bit better for you guys. So yeah, we got a level in there at the 62.13, so the 6200 level is what we'll be looking for to the upside. We do have this ascending line, so we want to see how price behaves in and around that over the next few days. You know, it may be likely we'll get, you know, a little pullback on this market. We've mitigated risk on this trade, so we've taken probably 70 or 80% of risk off this trade. So we're pretty close to kind of being sort of risk-free completely on this trade. But to get that, we're likely to need a little bit of a pullback. I mean, it's just the nature in which these markets move. They break higher and then they pull back and then they break higher again. So when you're in this kind of trend, the idea is to try and stay into it until you reach your ultimate aim. But then a lot can happen with price action, so it's a case of active management really, where we manage things on a weekly basis. So a nice bullish candlestick, which is great to see, and we're still looking at this 92.13 level. So what we'll do is we'll work with these weekly highs and lows. So let me see if I can. So to the upside, we're going to just make note of the high of this market, which is it's the 5902. So I'll change this level. So 59.02. So that's the level to the upside. And we'll go into the daily and really zoom in to extract this level and then go back into the weekly time frame. Make a note of the low. So the low is the 55.56. 55.56. 556, and that puts in our weekly and weekly high and low in this market. Okay, and just the last market for the evening then, guys, is the 10-year Treasury note. And again, this one is very much range bound, and just like we're seeing in the gold market, we've got this little bit of a flag price action occurring. Whoops, excuse me. Sorry, just an extension like that. So again, you're into these situations where if you get a breakout of a bullish flag, then you might get early opportunities to buy it, but also if you get a break with confirmation to the downside, you might get a technical sell. So that's just the 10-year note. So we'll have a look at that on the weekly, and we'll continue to work with these levels to the upside and to the downside. There is an argument that we could work with a higher low, but we're just going to work with the range low of the highs and the lows. So let's see, it's giving this market a little bit of scope. So we're talking about 5 weeks now of just sideways moving price action. So nothing really to sort of grab hold of to any great extent. So that's just a review of our 15 main liquid global markets, guys. So if you do have any questions, please do feel free to ask them. You're very welcome to follow us on Facebook, Twitter, and LinkedIn. The details are there up on screen. Just search for us on Facebook at TheLiveTradeRoom, and we post numerous items on a regular basis on there. So in addition to that, guys, happy to take any questions. We always appreciate the comments and emails from you guys from time to time. So if you do have any, if we are here to support you in your education. So if there is aspects of what we talk about and they're not that clear, then feel free to drop us an email at support@TheLiveTradeRoom.com, and we shall look to get back to you as soon as we can. So let's have a look through. Yeah, hi Portia. So you're just asking about the DAX. Yeah, very, very interesting one. We're obviously in the DAX. So let's go straight into that and have a quick look. So my DAX market keeps moving every time I log into this, but sorry, I think I've gone past it. Oh yeah, there it is. So yeah, this is the DAX. So this was a very technical trade to the upside. So this is on a daily time frame. So apart from, what was it, last Wednesday, which is a very, very bearish day off the back of a lot of the anxiety in Germany with regards to Merkel and the potential for coalition and her coalition partners potentially pulling out, and the impact that that could have on the German economy and Brexit negotiations and the potential for even a new election as well. So there was a little bit of, there was no reason necessarily, still as far as we perceived, there was no major reason for this major sell-off. So, we'll let price action do what it needs to do. Now, we've got our stop loss at a very, very technical level, and this is a very technical trade. And the principle behind this trade is to simply look to buy the dips. So we've had a pretty significant dip in this market. Most other sort of global global indices for a whole variety of different fairly reasonably well-performing economies are all at all-time highs. And the idea was, as well, from a fundamental perspective, is that this sort of pullback just gave us a little bit of a value trade to the upside. So things were back on track Thursday and Friday. You'd want this price action on Wednesday to slow right down, to really struggle to attack these kinds of previous lows and get a little bit bullish. And then Friday's price action was looking great for most of the day before we decided to get a 50% pullback. So looking at sort of bigger time frames, you can quite clearly see the nature, and this is on a weekly time frame as well, of working with levels, multiple levels on weekly time frame can really provide support, and that was the sort of principle behind that trade. On a monthly time frame, we've literally had a couple of very, very bullish months there in the DAX, followed by what was very, very bearish for the majority of the month. But as you can see, and there's still 4 trading days left in this market. So let's see if the bears still have conviction to start driving this lower, or if we're going to get that little reversal and we're going to squeeze this price even higher than where it currently is. So so these are the levels then with regards to the DAX, and it just needs obviously monitoring, and it's something we're going to do very, very carefully. So does that answer your question, Portia, or do you have yeah, okay. So obviously a follow-up question there from Portia is about, how do you go about buying the dips, and what do we mean by a dip? Very, very good question. Like if I zoom out, if you're looking for, let's say you've got a directional bias to the upside in this market. So what you want to do is look for opportunities to take this market higher. Now, in fact, this is I'll probably zoomed out just a little bit too far for the purpose of trying to explain this. But let's have a look at this price action. So let's say we have a directional bias for us to buy this particular market. Then one strategy that can be used, especially with the global indices, because they keep making new highs, and you can see how the price action has been moving there for quite some time. One strategy that you can adopt is an opportunity to buy the dips, and all that means is every time the market pulls back, can you identify opportunities to get into these markets to try to take them higher? If so, you might decide to adopt that strategy as a pretty significant approach. So you can see like how, you know, if you do your analysis and you want to be taking these markets longer, you can find some really defined opportunities at each opportunity just to take this market higher each time. And if that was a strategy in this market and you were buying at all these opportunities, you know, there's some really, they don't necessarily all have to be winners, but you could imagine there would be considerable returns on that kind of approach. So really, we're at this phase again, and we just identified this area. So let me take this off just ever so briefly. So what we're doing is we're identifying this level as a fairly consistent level of resistance, preventing prices from moving higher. So what we're getting is that kind of price action as a result. We're identifying these same areas just over here, but instead of providing resistance to the upside, we're now providing support to the downside. So we're getting this kind of price action, and that's what we're trading. And you know, looking to sell off these levels, perhaps in this area here, is not a bad trade to take this market lower. However, we're in this situation over here where we're looking to buy off these levels. So what becomes resistance to the upside becomes support to the downside, and it's a fairly basic principle. So just to answer your question succinctly, looking for dips is looking for pullbacks in these markets to identify opportunities to take these markets long. So I do hope that makes some sense, and if it doesn't, you know, don't hesitate to let me know. So that's the principle. We're looking to drive this market higher. I suppose the reality is a break beneath this structural low here would constitute a fairly significant shift, and you know, these are markets that you could get quite explosive moves to the downside. What I shall do as well in this market is just to put a, you know, not putting too much effort into it, but we're clearly in a channel, and you know, we work with it to something to that effect. So I suppose a break of this level to the downside would constitute a pullback to sort of 12,500 as things currently stand. So there's potentially a nice little sizable move to the downside as well. And let's just see what price wants to do in these circumstances. So, okay, if there's any other questions, guys, now is your chance. My pleasure. Thanks, Derek. We shall see you hopefully during the week. Okay, so if it gets high, the idea will be to close and wait for it to drop, then buy again. I suppose we're only looking to do one thing really, and that is just simply to buy this market, Portia. So we're only looking to do one thing, and that's to buy. So you know, what we want to do is to see this market squeeze back up to previous highs. I mean, that's the reason why we took this trade. It's very, very possible, you know, it has all the hallmarks to take that trade. So it is a trade that we do kind of need to take if we want to be consistent to the upside. It doesn't have to perform for us. You know, that's sort of the psychology of trade in the financial markets, where, you know, because we adopt the approach to risk that we adopt, you know, we want to engage with these markets, but we're by no means fretting about the outcome of the trade. So we take the trade on for very solid reasons, very technical reasons as well. with a little bit of fundamentals built in behind it and the perception of a little bit of value in this market. Now, time could tell and prove to us that actually the value is not at this level at all, that the value could actually be down here somewhere. So, you know, that may be the case. So you might just get, you know, this really sort of up and down move back to this kind of level in here. And then that might give you that might be the trade where the value lies. So we do think that these markets will be at all-time highs in the fairly near-term future. And the main principle for that is nothing structurally has changed. And unless that's the case, you know, there'll be close eyes on the ECB, but and their decisions with regards to rates and the unwinding of their own balance sheets and things of that nature. So we'll let the market do what it needs to do, and we'll just look to apply our strategy in hopefully a very consistent and very disciplined manner. And we'll go with it if it wants to move. If it wants to pull back, we'll wait for that opportunity to perhaps take it long at a much lower price. So we'll just bide our time. Hopefully we get to break these recent highs over the next few days, and we'll be back up to the 13,500 level. It would represent a fantastic trade for us in this market. So there's no doubt about it. Wednesday's price action is very bearish. And definitely puts a little bit of concern on the trade. But, you know, like I said, we're at a technical level with regards to a stop loss. So this market has to work very, very hard with serious momentum to sort of get us out of this trade. Great stuff. All right. Thanks so much, Portia. So on that note, guys, I can just see most of you just seem to be sort of saying good night. So there clearly doesn't seem to be any sort of significant questions of any kind, so that's good news. What we'll do tomorrow is we'll post those levels on our private Facebook page, and don't forget you can always email us at support@TheLiveTradeRoom.com. So on that note, thanks very much for joining us. This webinar is being recorded and it will be placed in your members login area, so you can review it again if you wish. So from everyone here at the Live Trade Room, thanks very much for joining us. Do take care, and we'll speak to you very soon. All the best. Bye for now.